Good morning, everyone, and welcome to the morning homework session and trade plan set up for Tuesday, March the 4th, 2014. My name is Doug McKay, and I am the founder and head moderator for Quantum Leap. We are a private organization, just a group of retail traders that come together in a private Skype group. We've been together for 4 years now, over 4 years now. And each morning we do a live homework session where we go through our routine, get set up for trading for the day, look at the market, set our trade levels up and our targets for the day, and basically create our if-then-that strategy or hypotheses. If you're interested in finding out more, you can contact me. My email is d.mckay@stealthtrader.com. And again, this is not a commercial venture, this is a private venture. But even though it's private, we've got to respect the law, so we are going to go through the legals. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. Only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves risk or loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors can lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades you see in Quantum Leap are for education purposes only. Please do your own due diligence and trade your own trade plan. Well, we certainly had a nice move overnight, but I still think that we are experiencing a blow-off top. I just want to quickly take a quick look again at the COT report. Always follow the big dollars, and you can see that this right here is the zero line. This is the COT report from Friday. This is the large spec right here. This is the commercial paper, and they are both below the zero. So they're net negative. And the small spec, the retailers are chasing this top, and it still leads me to believe that this is a blow-off top. I don't think it's necessarily going to be the high is in. I think we've got a bit of a weak high up here at 66.50, and we're likely to see a little bit higher. Remember, back before we took out that 1846.50, we said we had that target that was up and around that 1870, and I believe that Howard is saying that he's got a fib extension measured move up to 1886, I believe he said, but I'll let him go through that. I just want to go quickly through the numbers. Of course, we've got a brand new high, 1866.50, put in the other day. Our year open still 1837.75. We're nicely above it, so we are in a bull year now. Our key now to the downside, our month low that was put in yesterday to the tick, 1832.25. Nothing else in terms of the macro numbers. We did have lower Globex yesterday in the Globex going into the Friday open auction to outer range. We had normal variation. We broke the ID to one side. 4 1/4 point opening swing. Anything, this is one of the things I keep talking about in the homework sessions, anything over 2 points is typically going to lead to a rotational day. We certainly did have a rotational day yesterday. Follow your clues and what the market is telling you, what type of day. We had a lower initial balance, high at 49.50, low at 39 for a 10.5 point range. Again, back up around this year open. We're going to get wider MU orders or market on open orders as we have a disparity of perceived value, and the bears and the bulls struggle it out. First intraday, that all the intraday numbers were all lower. So we're seeing some weakness, and VPOC was lower, close was lower, the low was lower, the high was lower, and the 1230 was lower. So it was looking like there was some some weakness coming into the marketplace. Of course, that's all been erased overnight. Quickly looking at the value area. Value area was lower, high 44.50, low 38 for 6.5 point value area. We broke the IB outside of the pocket again at 10:08 Central Time. And you can see that we've got volume coming in, another high volume day. So my personal opinion is that the large commercial and large spec are selling into this rally. And I think overnight, in addition to Putin trying to weasel his way out and say this was an exercise into Crimea and Ukraine, I think that they ran stops last night. I think a lot of people, a lot of shorts woke up this morning feeling a little bit of pain. Going over to the daily report, our ATRs today aren't going to make much use to us because of the fact that our ATR target to the upside based on that overnight low 42.75 is 1865.75, and we're likely to get some extension on that. And then to the low side, 1842.75. So I mean, not much that's going to tell us. We really don't have any news today. We've got consumer optimism, or economic optimism, I should say, at 9. Not really a big news, or probably just a knee-jerk reaction. So let's go take a look at what we're looking at. I just want to, do a quick view of what we were looking at yesterday. You can see it was a beautiful thing. We, hit our main target above, over-ticked it by a couple ticks, and then we, hit our lower target right to the tick. So, our key level of trading off of that 1840, you can see as it offered us support in the morning, and then once we broke through it, went down, tested that 34. We said if we couldn't hold 34, first destination to pick up buyers would be 32. And boy, they really stepped in and picked up buyers. The other thing I want to show you is this was a very good classic Mr. Sneaky. And again, a lot of people that don't know the Mr. Sneaky setup, it is a reversal signal. And if you were to take it, I love the way this set up because you had a definitive move down, which is one of the criteria. You had the inside bar right here, and then after the inside bar, you were waiting for the low to be put in after, and then respected. So the low was put in right at that 32.25. And of course, you wouldn't have wanted to get long before you got back above that 34, the key CLVN. Composite low volume node, and then you respected your low after the Mr. Sneaky, and you could have entered on this candle right here, which would have given you a entry somewhere in the neighborhood of around 36.50, 36.75 if you're lucky, 36.25. But it was a beautiful setup, and you could have rode it all the way back up to 47 and never taken any heat on it. So Mr. Sneakies, I've been noticing, are starting to come back into play today, or this month and last month. So keep an eye on them. But that was a beautiful day yesterday in terms of setting up our charts and our trade levels. Just want to take a macro to a micro. You can see monthly still very much intact, good slope, good separation. I've got this new trend line coming in. From basically November of last year, November of 2012, and we're still respecting this trend line. Although the slope is getting accelerated, we are going parabolic, and this doesn't keep going forever. Going over to the weekly. Same thing. You've got good slope. You've got separation. You've got trading up around the all-time highs, and the trend is very much intact on the weekly. On the daily, I got something going on with my mouse. It's jumping around on me. I think I'm losing battery power here. On the daily, again, we're going parabolic. The slope is extreme. We've got slope and separation, but we're holding the 9 EMA. If we get below the 9 EMA and get a close, then I think we'll see some retracement. But I think we could still see some upside. You can take a look on the geometric chart that we've come up now and tested this upper line of the downward sloping fork from below. We couldn't get back inside of this intermediate term fork, bounced off of the top line, come up and tested the upper line. A test of the lower line here is going to bring us back down into that 1840 area, the key area that we were looking at yesterday. And if we do get some weakness coming in, a test to close out the gap, or the tech gap on the 20 SMA is going to bring us into this 1821-22 area and test the lower line of the longer term sloping fork. Just a quick look at where we're at on the intraday. We're still in this consolidation, although we're getting this this push up overnight, and we do have a bit of a technical gap on the 4 hour. So just bring this in, you can see that we've got this technical gap here. We're likely to go sideways or come down a bit to close out this gap, and we're creating this naked cross right here between the 9 EMA and the 20 SMA and around the 1850 level. Going down to the 30-minute. We did create a couple flags. This is another flag that's setting up. We had two technical gaps. This one was closed out through time. This was closed out through time and price. We're holding the 9 EMA on the 30-minute, but you know, keep an eye on this because we can bounce and go make new higher highs based on a flag. And if we get below, then I'd be looking for a bit of a retracement back. And we've got a couple gaps. We've got a gap above us and a gap below us, so it's going to be interesting to see. On the 5-minute, again, just you know, trying to drill down, seeing what the trends are coming into the RTH session. We're basically consolidating. We were getting a bit of a downward trend. We do have a naked cross here at 1863.25. Keep an eye on that to be retested to the upside, and a possible move to test that weak high. You can see, I forgot to do it. I wanted to show it to you on the 30-minute. And I'm really starting to have problems with my notes here. You can see that this high up here at 1866.50 is somewhat of a weak high, and we're coming up to retest it again. So we're likely to come up and take out that and put in another all-time high. Let's go take a look at the big picture. Currently, right now, we're trading up in this wick from the selling tail of the 1866.50 all-time high, and we're trading above the gap. The close on Friday is 1860.50. There is also I want to pay attention. I want to take a look at the Globex too, because it's a significant LVN right there as well. So the fact that we're trading in this upper distribution right now, we've got a naked cross up here at 63.25, just one tick below the CHVN. We've got the gap close on Friday at 60.50, and then of course we've got a gap close from yesterday all the way down at 43.25. I don't think that's really going to come much into play today. Key level to watch is this 1859.75 as they come down to close out this this gap on Friday. We also have the VPOC from Friday at 57.75. So if they come down and break through this 59.75, we're likely to come down and test this 1857.75 and take out the naked VPOC down there. So 1859.75 is the line that I'd be watching for retracement and a possible move down to the 57.75. And then below that, you've got 54.75 CHVN. There's not a lot to go on up here. And then the overall value area high from going back to February the 14th through till yesterday, the value area high is 1850.75. So we're going to be opening up outside of yesterday's range, outside of yesterday's value, and outside of the microcomposite value. Look for initiative buyers to step in and take us up to take out that high at 66.50. But key level to hold is this 59.75, and if they don't hold it, look for the next responsive buyers to step in around this 57.75 with a possible push through to 54. And then if we break through this 54 and we don't find buyers there, I'd be looking for a larger retracement back down at 1850 value area high. But more importantly, I'm looking at this level right here at this 1849, 1848, our target on the upside from yesterday. That is the microcomposite VPOC from the last where we were holding value before coming down and retesting this 42 level and coming down to pick up buyers here at 32.25. So if they're looking for buyers and we get inside of the value, I'd be looking for them to possibly step in at this 48.75 area again. Let's take a look at what happened overnight. I wanted to point out this this key LVN right here at 1858.75. It basically fits right in with that possible move down to test and close out the naked VPOC from yesterday. But you've got a double distribution overnight with the VPOC overnight being all the way down here at 55.50. So if they can't hold this upper distribution, then I'd be looking for a move back down into this 55 area, or more specifically this 54.75 CHVN. So let's move our numbers over to our intraday chart. We have the overnight high at 65.75. Sorry, my mouse is really starting to act up on me here. Come on.
You can check to see if there's dust or something through the mouse.
No, it's just when my batteries get low, it starts to get jumpy. And then the overnight low is down here all the way at 42.75. Come on, it's going to be hard to draw right now. Easier just to do it that way. And then the overnight VPOC is currently up at 55.50. So we're going to be opening up, just above Friday's close. So I'd be looking on the open, and even if we come down and we're trading below it, I'd be looking for the gap to be closed at 60.50. I'd be looking to trade off of this 59.75. So this 59.75 is going to be a trade area that I'd be trading off of. Howard, you're going to have to, you know what, can you take over and just go through your stuff and I'll wrap up? I just got to change my my batteries in my mouse because it's going to slow us down here. So I'm going to switch over to Howard, let him go through his analysis, and then we'll come back to wrap up with me. I apologize.
Well, thank you, Doug. So I'll just start with the daily chart here. And what I've done is I've done a projection here from this low back on June 24th. I've looked at the significant retracements of the move up since then. So we have one here, and we have one here. So I've numbered this as a wave 1 higher, wave 2 retracement, wave 3, wave 4, and my projection for wave 5 is up here at 1886. 86-ish. So that would be my current bid projection for this this current move. So that's what I'm looking at if we do continue higher. We came within about a point of hitting our all-time high overnight. So looks like we're looking to try to close or at least repair that weak high that we had at the high. So 1886 is my fib target higher. If we get there and continue higher, I'll project another target after that. So let's look at our market internals. So looking at the sectors, we pretty much had unanimous participation among the sectors moving lower after yesterday's gap down. So I suspect we'll see many of the sectors move higher after today with this gap higher, depending on if we hold this high or not. Healthcare is still the leading sector at the moment for the year. So now we're going to look at advanced decline, which is the second graph, up volume versus down volume, which is the middle, second to the last, and on balance volume, which is the lower chart. So advanced declines, and all these two graphs are on a 10-day average basis. Made a high on February 18th. The up volume versus down volume made a high here on February 20th, a couple days later. And since then, there's been a waning of net advancers. You know, they're still above the break-even point here at 50% as of the end of yesterday. But we can see the divergence between these two studies and price. On the other hand, we look at on-balance volume, and on-balance volume is pretty much in sync with price. So we're getting a little bit of a mixed reading from these two different analyses. On-balance volume is showing volume that supports price, whereas the advanced decline in up volume versus down volume does not. So we have divergence among divergence on these indications. So a little bit of a mixed picture. But so far, on balance volume seems to be reflecting more accurately what price is doing. Finally, we'll take a look at Dow Transports versus Dow Industrials. And no major changes here. For the first time in a while, the Dow Transports actually broke below the Industrials. Transports being the pink line and Industrials being the cyan line, but since then, they're maintaining their movements in sync with one another. But both are showing below their year open. So that's all I have, Doug. If you had a chance to replace your batteries.
I have.
Okay, back over to you.
Okay, so I've gone and drawn in my my levels. Currently trading 62 right now. We're just above that gap. We're going to open inside of Friday's range, inside of Friday's value area. Friday's value area high is 64.75, and value area low is 54 and a quarter. So this really fits into what I'm looking at right here. So right now it's important for us to hold below this this value. If we don't hold this value area high at 64 and a quarter, that is going to be a trade area right there. That was the last one that I was ready to put in here. I'd be looking for a move to take out the overnight high and go test this 66.50 with a move to make a new high. Howard, did you say the fib target was 86.50 or 86.75?
Just 86.
86, okay. So that is going to be our extended target to the upside. There's really not much more we can go on to the upside. So what I'd be looking for if we do make a break above 66.50, that we make a new high, but you don't know where the responsive sellers are going to step in up there. So be careful. Don't buy the new highs, especially with the COT report. If you're going to get long, get long if you see responsive buyers stepping in around this 59.75 and a push back up to test the value area high from Friday at 64 and a quarter. You could take the breakout at 64 and a quarter because you've got a good probability, 96% probability of taking out the overnight high at 65.75 with scaled target being that 66.50. Anywhere between 65.75 and 66.50 you'd want to scale, but I would leave one to push through and make new highs and possibly get some extension to the upside today. If we get below this 59.75, then I would take the short into the 57.75 with a possible continuation. You'd want to get scaled before this 57.75, and because you might find responsive buyers stepping in here, but I'd look for a continuation down towards this 54.75 and the value area low from Friday at 54 and a quarter. So anywhere your target would want to be before 54.75 or 54 and a quarter, with a possible continuation down to back into that 51 area, or more importantly that 50.50 CLV, I mean sorry, not CLVN, 50.50 value area high from the microcomposite VPOC with push through to 49.50 to test the range high from yesterday, but I think they actually pushed down into it and probably come and tag this 48.75 because that's where they had accepted value just prior to the push up and then the breakdown and then the move back up. And then the extension would be down to test the value area high from yesterday and the range low from Friday, and if we break back inside of yesterday's range, then I'm looking for a move back into that 41.75. Because remember, 41.75 is the overall, microcomposite VPOC, and where we'd have to come down to, find buyers. And that would also close out the naked gap that we've got at 1843.25. And I don't think the 43.25 would be where they stop. I think they'd go take out the overnight low and push down to the microcomposite VPOC at 41.75 and the naked Depop at 41.50 from yesterday. And then below that, you've got the value area low at 38.25. Just below that, this would be a secondary target below if we get into this area at 36.50. That's that CHVN right here. These are the, in the composite, the two most dominant price acceptance areas is 36.50 and 32.25. And of course, we went down to 32.25. Of course, in between that, we've got 34.25. But due to the fact that we've had a couple lows down here now at this 32.25, I think that you'd likely see them test this 32.25, break it, and come down and test the other side of balance at 28.25. And then my extended target for the day, which I don't believe that we're likely to get likely to see hit, is this 18.25.50. My main hypothesis is to come down and close that naked gap, push through, possibly come down to this 54 area. Excuse me. Find some responsive buyers to hold us outside of yesterday's value and rotate back up. And I think that we've got a higher probability of taking out the overnight high than we do the overnight low, just where we're trading, the fact that we're trading in yesterday's range. So I'm anticipating that we take out the overnight high today and test this week high at 66.50 and probably give us a new high. But we could just get stuck, chopping around in this area between 54.75 and 66.50 as the boundless area. So it's going to be, and we've got headline risk because of what's going on with Russia and Ukraine. We don't really have any scheduled news, so it's going to be a day that you've got to stick to your guns and not try to take a lot of heat. Pick these levels. If you agree with these levels, don't let them go against you too far. But again, I think that we take out the overnight low, we test the 59.75 area, possibly down to 57.75 or 54.75. But I think we eventually rotate up, and you could see initiative buyers stepping in right at this 59.75 and taking us up to take out the overnight high, within the initial balance. So just be careful. It's going to be a bumpy ride today, and when you're trading at the all-time highs and after such a big move overnight, I mean, that move, that range was pretty big. I think it's going to be really choppy in this area, and it's going to test both sides of these levels and possibly even come down to this 50 level. I'm not anticipating it getting much lower than 49, this 48.75 to the low side. I mean, that would essentially be a fairly large move. But we do have these two wick areas, so I'm anticipating. I don't think it's going to be today, but we're going to come down into this area between the 52.50 area and this 43 area, and I think we're going to get stuck in these wicks here because this area is not properly auctioned. So we're going to come around and chop around and see if the buyers and sellers will come down and do some business back in around this 48.75 and in this 4-day balance that we had prior to the push-up and then the breakdown. So that's what I'm looking at in ES. Really quickly on gold. I know I want to get out of here in the next 3 minutes. Gold still have this long-term bottoming pattern, the descending, broadening wedge. We've got the cup and handle we've been following. We've been watching to see where the right rim is going to set up. We said that it would probably and it wouldn't it would be a better pattern if it came up into the 61, 62 area, so that we have equal left and right rim. And right now, the retracement to set up for the handle is all the way down to 1288, 1289 area, or down to the 1245, 1246 area to validate the pattern. And then if we break back above this 55 level, we've got a measured move now up to the 1524 level. And let's take a quick look at what that looks like on the composite. We've come down. We've now got balance now between the 24th and today. We rotated back down, back to balance and around the VPOC at 33.50 area. We're currently trading 34. We've got the level to watch above is this 37 and a quarter. If we get above 37 and a quarter, look for a rotation up to 40, 40.2, but the value area high is 43, and then the big number above is this 5180. If we get above 5180, I'd look for them to take out and test the range high from this microcomposite at 55 and a push through to 63, 64 area with targets above at 70, 77 and 87 level above us. If we stay below 37 and a quarter, I'd look for chop and a move down to test this 27 value area low. And if we get below the value area low, targets below, immediate target is at 2350, 24 area with the former microcomposite down at 21 and with 1315, which was our target to the upside when we broke out of that descending broadening wedge, and the former microcomposite with the other side of balance being down there at that 1300 level, with the possible continuation to complete the candle at that 1286 or candle, the handle of the cup and handle down in that where was it, 1287 50 area, and that corresponds with coming down into this area right in around here, around this 1290 area, and then with push through possibly to that lower extension, the 61.8 retracement, which is all the way down at 1246, and that 1246 is right in around this really big number, which is the 1242. And I would even say that if we even came down to this 1242 level, or 1241 level, that it wouldn't necessarily violate the handle or the pattern, because Olkowski's rules are you can go 60%. I use the fib that is a little bit higher for my own use, but it wouldn't really validate the pattern by moving down there. Anyway, we seem to be going long these days with these. I know there's lots to go through, and then we've got newer members that are trying to catch on, so I do apologize for the length of these helping sessions. Be careful on the open. We're trading 62.75. Watch that value area high at 64 and a quarter, and a possible push. We might push and test the overnight high before we come down and close out that gap at 60.50. But I do think it's going to be really choppy. Trade well, trade safe, and we will catch you on the flip side.